that's also true because a lot of our grandparents had home ownership, but because the prices of housing has went up exponentially, a lot of us who are of younger generations, we can't even afford our own homes. I'll be 40 this year, and I can't afford a home. I would never be able to afford a home. 40. I'll be 40. Oh God. Actually, nah, because I look damn good. Anyway, I'll be almost 40 this year. Almost. I will be 40 this year, and I can't afford a home. My mother is in her 70s and she's never owned her own home. She's a baby boomer. My grandmother lost her home. Somebody took it right from under her. So, when it comes to wealth within even my own family, non-existent. It's not there. So, what are we to do? Right? And then when it comes to things like, well, you have to establish credit. Well, we can talk about that, but the whole credit system is racist. And watch some people who are, cappies are going to go, well, no, it's not racist. You just have to be responsible. No, it's racist. And we'll get into that in a second. Thanks. When I say that word, how does that make you feel? Is it a positive feeling? Neutral? Is it negative and visceral? In our modern society, when it comes to providing products and services and commerce, banks are an essential part of our society to store our money, get loans and investments. This is just as an important part within the Black community. When it comes to FDIC insured banks, only 1% are Black owned, even though we make up 13% of the population. Are Black owned banks the answer to our wealth disparity as a community? Is it just access to banking that we need to assist us with improving the community? Let's take a look. So let me share this with you guys. And shout out again to Roger Meadows for this one. Let me share this article and then we'll get into this video because I want to break this video down because I think this is also going to be very important to break down because especially when it comes to when people talk about Black owned, like we need to have more Black owned, support Black owned businesses, support Black owned banks. Let's see. So this is out of CNBC. It says less than 1% of all FDIC insured banks are Black owned, according to the FDIC. And so they're going to go over some key things, right? And it says big banks and corporations like Yelp, Netflix, and Microsoft have announced major investments in Black-owned banks. So it says the number of Black-owned banks have dwindled immensely over the years. Between 1888 and 1934, there were 134 Black-owned banks to help the community. Today, there are only 20 Black-owned banks that qualify as minority depository institutions, according to the Federal Deposit Insurance Corporation, or FDIC. So, we're going to go over all this in just a second. So, what do you think? Do you, especially if you're Black in the chat, do you think that having a Black-owned bank is I should have put this as a poll in the comments. My apologies. I was thinking about it, but I was running late. But do you think having a Black-owned bank is the answer? Is one of the biggest answers? Let me know in the comments, okay? I'm going to share this video and we're going to break this down. Because I have my thoughts on this. And then we're also going to go over some of the facts about banks. So this is a interesting.
Big banks.
So this is entitled "Why Microsoft is Investing in Black-Owned Banks." Now, I'm gonna be honest with you. This already kind of gives me sus vibes because Microsoft is investing. You know good and well that we don't trust big corporations like Microsoft. And I'm gonna tell you why. But we'll get into this. Let me see. All right, let me enlarge this. All right.
Big banks and major corporations like Yelp, Netflix, and Microsoft announced major investments in Black-owned banks.
Well, black banks have gained an additional $1.5 billion in lending power since the death of George Floyd, created by a $150 million increase in equity capital.
These banks,
First of all, they waited till the death of George Floyd to do this. Y'all didn't want to do it when it happened to Freddie Gray, Philando Castile. Y'all didn't want to do it. Y'all didn't want to do it with oh my God, what was that guy that was beat to death in the early 90s? I'm forgetting his name. I think his last name was King. But anyways, y'all didn't want to invest. Y'all didn't want to invest in us 30, 40 years ago? Y'all waited till George Floyd? Rodney King. Yes, thank you, Jacqueline. Y'all didn't want to invest when Rodney King got beat? Interesting. Let's continue. I'm not even all the way in.
these banks attempt to help the so-called banking deserts, or typically minority neighborhoods where brick and mortar banks are far and few between.
In a perfect world, you wouldn't have the racial wealth gap, and so you wouldn't have the discrimination that created Black-owned banks in the first place.
So first of all, one of the things I want to say, and this is something I think that a lot of times people really don't consider. So here's the thing. In most Black neighborhoods, actually, let me enlarge myself really quick because I don't have a producer, so it's all me. Let me rap with you for a second about Black neighborhoods. In most Black neighborhoods, we are working or working class or working poor, right? So what's the closest to us? Check cashing places and payday loan stores. Let's be real. That's what is in a Black neighborhood, right? A block from me, there are probably 5 or 6 check cashing places and payday loan stores. That's the way it is, right? This is where we cash our checks and get loans because we don't make enough to live on a daily basis, and we don't have the credit to be able to get a personal loan from a traditional bank. So this is where check cashing spots and payday loans come into play. Because so many of us are working class and working poor, you see these establishments more in our neighborhoods. So if you're in an area with less financial institutions, then more check cashing stores and payday lenders will be the closest thing. These payday lenders and check cashing stores charge fees for their services at a much higher rate than a bank would. These can be seen as a private tax on poorer communities, especially Black communities. So I'm going to get back to this video in a second, but let me share this with y'all. Because I think this is important. So this is from Brookings. So this is an analysis of financial institutions in Black majority communities. Black borrowers and depositors face considerable challenges in accessing banking services. So Let me see. So here it says, majority Black and Latino or Hispanic communities have fewer options when it comes to financial services than majority white neighborhoods. In 2017, majority Black zip codes located in metropolitan areas with over 250,000 people had a median dollar deposit-based Herfindahl-Hirschman index of 4,584, while non-majority Black zip codes had a median HHI of 3,106, where the higher scores indicates less competition. Similarly, majority Latino and Hispanic zip codes with median HHI of 3,580 compared to a median HHI of 3,157 in non-majority Latino or Hispanic zip codes. Access to a wider range of financial services can mean lower interest rates and higher savings rates as banks compete to attract a customer base. So, we just don't have banks as plentiful in our communities than in white neighborhoods. You're more harder pressed to find a bank in a Black neighborhood than you are to find in a white neighborhood. That's just the truth. So, let's continue in this.
That created Black-owned banks in the first place.
People of color, African Americans, in this conversation, were historically barred from accessing financial goods and financial services.
Discrimination is still there, but it just looks differently. It's not as blatant. It's not just on face value, but there are other things like credit scores.
And the Black Bank really kind of emerged as a way of meeting some of those needs.
Black-owned banks are so critical when it comes to, supporting racial equity initiatives and the Black and African American community.
Black banks are far from thriving. Americans who identify solely as Black or African American make up 13.4% of the U.S. population today, but less than 1% of all FDIC-insured banks are considered Black-owned.
Are Black banks struggling? Yes. The banks reflect the community in which they are in. So whatever the struggles are of the community, the banks have the same struggle because they're enmeshed in that community. They cannot change it unless the community itself has more wealth.
So why are Black-owned banks key to ending racial disparity in America? And what do they need to succeed?
Are they really the key, though? That's my question. Because what would the difference between Black-owned and white-owned banks really mean for the community overall? Let's continue. Would it be equitable? Let's continue.
The history of banking in America is riddled with incidences of systematic racism. Terms like redlining originate from banking practices that segregated populations of color by denying loans for housing. While the federal government eventually stepped in to resolve financial discrimination with legislation like the Fair Housing Act of 1968 and the Community Reinvestment Act of 1977, experts say that the banking industry still has a race problem.
The country has a race problem, one that is rooted in wealth and power, which are largely synonymous. Nowhere are decisions about who gains and controls wealth more concentrated than in the banking and finance sector.
We are not far away from the subprime crisis where Wall Street went to target Black and brown communities with their worst loans. The people who were sold a subprime loan could have been eligible for a prime loan. The financial crisis wiped out about 53% of the wealth in the Black communities, and that's wealth that hasn't been recovered.
I think we still see problems that are inherently baked into how we decide who gets loans or baked into how we invest in community. Redlining is still there, greenlining is still there, because most of the regulations, having been one, is focused around the fiduciary duty and the stability of the bank, not how they act in the community.
So there's a couple things that I wanted to point out, and I had to make sure I stick to my notes, but here's the thing that I think a lot of people are not cognizant of, especially, it could be, there's some white people that probably don't really realize this part about Black communities, but when people say underserved, a lot of times it's Black communities. Now, yesterday was Dr. Martin Luther King Jr.'s birthday, and a lot of people were talking about it. A lot of us were celebrating it. And a lot of us who are, especially on the left, we know who Dr. Martin Luther King was because he was one of us. He was a socialist. He was for Black, not just equality, but also Black equity. People were praising him for pushing racial justice, equity, and equality. Many Black people feel that, one way to help is through Black-owned banks. This is a part of the buy from Black-owned and will help us greatly. And here's the thing. I actually agree with that. I agree. Black-owned businesses and things like that are great because it actually keeps the dollar within our community and it circulates, thus helping us in an equitable way. Look at what happened in Tulsa, Oklahoma. This was back in 1921. It's called Black Wall Street. Many of you probably heard of it before, but it was Black-owned. It was a thriving business area with Black-owned banks, shops, and services until racist white people burned down the town and murdered a bunch of people based on a false accusation. Go ahead, look it up. This was repeated over and over and over in towns throughout the United States. You ever heard of Seneca Village in New York? Sure you have. You've probably been through Seneca Village many, many times, but it was torn down. It was an all-Black neighborhood, torn down and replaced with an area called Central Park. That was Seneca Village. Yeah. All-Black town, torn down. All-Black neighborhood, right? Or Rosewood. That was a town here in Florida. Destroyed. Ocoee, few miles from me in Florida, destroyed because Black people dared to try to vote. Many Black towns in this country are historic Black towns are underwater in this country. Literally underwater. They've been made into lakes. So some of those favorite lakes that you like to frequent, that you like to fish at, that you like to swim in, oh, there are Black towns that are underneath that water. Yeah. This is something that some people don't want you to learn because they think, oh my God, if white people hear about this, they're going to feel bad. No, we don't want you to feel bad. We want you to change things so that things like this won't happen again. That's what it is. Black people also have a never again. It's not just Jewish people that have a never again. We have a never again too. And yet people still go, well, that's in the past. Think about it. And so I think that's one of the things that we need to focus in on, right? But also there was something that this lady said that I also want to also focus in on. So let's hear what she has to say just a bit. I want you to hear what she says too.
Or baked into how we invest in community. Redlining is still there. Greenlining is still there. Because most of the regulations, having been one, is focused around the fiduciary duty and the stability of the bank, not how they act in the community.
Okay, so she said a word. She said fiduciary. What does fiduciary mean? Because a lot of times you'll hear people like me say that, and people are like, wait, what is that word? Now, let me share with you guys the definition of fiduciary, because this explains a lot, okay? All right, so this is from the Consumer Financial Protection Bureau, which is a government agency, and it gives you the definition of fiduciary. Let me enlarge this so you guys can see. Okay. So, What is fiduciary? A fiduciary is someone who manages money or property for someone else. When you're named a fiduciary and accept the role, you must, by law, manage the person's money and property for their benefit, not yours. This could even be a leasing manager or a property manager. That's a person that has a fiduciary responsibility to the owner of the property, right? CEOs, CFOs, COOs, so CEOs, Chief Executive Officer, CFO, Chief Financial Officer, COO, Chief Operations Officer, and many other executives and officers within a corporation also have a fiduciary responsibility to whom? That would be the shareholders, the people who own the shares, who own the means of production within a corporation. That's what it means, right? Banks, just as well, are no different in this regard, especially the corporate banks, because they are corporations. They have a fiduciary responsibility to the shareholders. Just because you have a bank account, just because you got checking and savings in Bank of America, don't mean that you are a shareholder. You're not, all right? You're just an account holder. You don't mean diddly squat to them, right? You're not a shareholder. Shareholders are people who own the shares in places like Bank of America and Chase and JP Morgan. And some of the shareholders are even the CEOs, CFOs, COOs, and other different financial officers. Executives and officers within the board. So that's what it means. Okay. So that's what fiduciary means. And I want everybody to know that, because we're trying to be educational here as well, okay? So, when it comes to this, by this definition, executive officers within a corporation, including banks, have a fiduciary responsibility to their shareholders, meaning they matter. It's their wealth. It's their money. It's their property that what's matter. You as a worker don't matter. So let's take a look at this. So when it comes to their fiduciary responsibility, let's examine this. And big shout out to Roger Meadows for this. I don't think he'd think I was going to pull this up, but this is from the Public Banking Institute. At a glance, they have this table. I encourage everybody to take a look at this. But so you have depositories. So a big bank is also a depository, right? Big global banks. So I want you guys to look at this. So ownership, right? Ownership of big global banks. These will be your JP Morgans. These would be your Regions. This would be your Bank of America, so on and so forth, PNC, whatever. It says the big global banks are owned by their shareholders. The largest shareholders of every mega bank include the behemoth asset management firms BlackRock, Vanguard, and State Street, while holding company Berkshire Hathaway. Remember that name, Berkshire Hathaway. We're going to be getting to that in the next segment. Berkshire Hathaway is the largest shareholder of two of the biggest U.S. banks. Yes, people. Yes. The biggest culprits are also people who own the banks. Now, as for charters, they hold charter. Yeah. Depository. Yes, they are depositories, right? It says the big global banks are depository banks, which means they can accept deposits, include deposits from government entities. For instance, here in Orange County, Orlando, you have Orange County government actually banks with Wells Fargo. So yes, Wells Fargo literally holds the money that our taxes that we pay in Orange County they hold that money. So if something happens to Wells Fargo, this county is screwed. Anywho, well, screwed up to $250,000. I'll just put it that way. Anyway, So let's go here. Profits. Says the profits of global banks benefit their globally based, what is that word? Shareholders. The largest shareholders of every mega bank include behemoth institutional investor management firms like BlackRock, Vanguard, and State Street, while holding company Berkshire Hathaway is the largest shareholder of two of the largest U.S. biggest banks. So, loan public mandates. Big global banks don't have a local focus. They lend to global industries and for speculative purposes and derivatives, existing real estate, leverage buyouts. Non-productive lending leads to asset bubbles and crises. There are also biased lending in favor of the largest possible companies. The larger the bank, the lower the share of smaller loans in its business loan portfolio, and the higher the average loan sizes. So that's that. They can borrow from the Fed or other banks. No transparency, basically, because, well, why would they give transparency to people like you, right? Though they do have some transparency when it comes to, hang on, I might have to shrink this just a little bit. Okay. So global banks are required in all banks and savings loan associations to make quarterly standardized financial reports to the Federal Financial Institutions Examination Council. So this data on types of loans, made assets, liabilities is used in monitoring in condition, performance, and risk profile and individual institutions in the industry as a whole. So you have that. Big global banks are managed by independent professionals, and then public input. There's no public input. So that's how these banks work, right? So when it comes to ownership, you don't own diddly squat, right? So I wanted to make sure that we make that abundantly clear. So when they talk about a fiduciary responsibility, it's never to the account holders. It's never to you, right? So you don't matter. So let's continue.
Accessibility is a big issue. Black neighborhoods have seen a disproportionate number of bank branch closures compared to white neighborhoods. Between 2010 and 2018, the number of banks in majority black neighborhoods decreased by 14.6%. The disparity is even starker for major companies like JP Morgan and Bank of America. JP Morgan decreased its branches in majority black areas by 22.8%, compared to a net decline of just 0.2% in the rest of the US. For Bank of America, it was 29.1%, compared to 18.4% in non-majority black neighborhoods. In total, JP Morgan closed 55 branches, and Bank of America closed 95 branches in majority black areas within the span of 8 years. When asked for comment, JP Morgan replied that as part of their $30 billion commitment to addressing racial equity, they've opened new branches in Black, Hispanic, and Latino neighborhoods and offer free financial health and home buying workshops. Bank of America said that 36% of its financial centers are now located in majority minority neighborhoods, with $1.25 billion invested in advancing racial equality and economic opportunity.
And none of us are above having to go to a local bank once in a while to make deposits, to take out cash.
In its void, oftentimes what we'll see is one of two things. Either we will see no availability to liquidity, that is, that there's no other place for people of color to actually access their money, or, and just as perversely, we'll see higher prices for that liquidity. That is, that we'll see higher interest rates, even in excess of say 20% or 30%, in order to actually access money.
Researchers have also shown that discrimination in loan denial and cost have not declined over the years, in spite of regulations that were designed to prevent them.
It is legal because of how we have defined risk tolerance, how interest rates are charged. It's legal for myself to be charged more than my white peer. And so I think that discrimination is still there, but it just looks differently. It's not as blatant. It's not just on face value, but there are other things like credit scores that people use, or geographic location, or asset value of your home.
The way that race has been used to provide subsidies for some communities and not other communities. And the way that discrimination works insidiously has affected so profoundly Black home ownership, which is much lower than white home ownership, Black wealth accumulation, which is, 12 to 1, 10 to 1, regardless of income. And that is 100% on account of these racist credit policies and home ownership.
That's what
So I just want to say also, remember, there was an article that came out, what was it, 2021, 2022? It was probably earlier than that. But how Black wealth actually tanked under Barack Obama. It was because he allowed these banks to continue. He didn't let them fail. And instead of actually giving money to the actual people who have mortgages, the actual people who own these homes, to homeowners, he gave the money straight to the banks. Now, the banks still would have gotten this money regardless, but instead he skipped and gave it straight to them. And then what did they do? They foreclosed on homes, and it especially happened in Black communities. And guess what? That Black wealth, it just tanked. So we're actually worse off now than we were back in 2008. Thanks to the first Black president. Interesting, right? And this was from the big banks, really.
Of these racist credit policies and home ownership.
That's where Black-owned banks come in. Banks and credit unions must be federally designated as a minority depository institution by the FDIC to qualify as being Black-owned. MDIs must either have 51% or more of their shares owned by minority individuals, or a majority of its board members are minorities, and the community that it serves is predominantly minority as well. As of 2021, there are 146 minority depository institutions in America. 20 of them qualify as being Black or African American owned.
It allows people to have a certification and legitimately, one, signal to the larger community they are there to help them. Two, really put some guardrails, because these institutions, particularly much like CDFIs, are designed to serve communities that have been historically overlooked and underserved. So I would say the benefit of that certification is giving visibility to those folks. And I think it's also kind of elevated the fact that institutions, and certainly the federal government, believes that MDIs have a vital role in society.
Besides its designation, Black-owned banks work very similarly to traditional banks. They provide mortgages, loans, and insured bank accounts. What does make them unique is their mission to bring equality to banking, providing affordable financial services and education to people that need it the most.
When a bank has a branch in a community, people are more likely to get access to financial institutions, and Black banks, Black credit unions are more likely to locate in Black communities.
From a business decision, I completely understand if you follow the negative data that exists about us, why would a bank come? But obviously that's when the presence of Black banks realized, no, I don't believe everything I read. And I see that there's massive home ownership from, prior grandparents. I see that people are going to work every day.
Black-owned banks.
That's also true, because a lot of our grandparents had home ownership, but because the prices of housing has went up exponentially, a lot of us who are of younger generations, we can't even afford our own homes. I'll be 40 this year, and I can't afford a home. I would never be able to afford a home. 40. I'll be 40. Oh, God. Actually, no, because I look damn good. Anyway, I'll be almost 40 this year. I will be 40 this year, and I can't afford a home. My mother is in her 70s, and she's never owned her own home. She's a baby boomer. My grandmother lost her home. Somebody took it right from under her. So, when it comes to wealth within even my own family, non-existent. It's not there. So, what are we to do? Right? And then when it comes to things like, well, you have to establish credit. Well, we can talk about that, but the whole credit system is racist. And watch some people who are, cappies are going to go, well, no, it's not racist. You just have to be responsible. No, it's racism. We'll get into that in a second. But yeah. Let's go.
Also support the economic life of the communities they serve by providing much needed loans for small businesses, nonprofits, and Black homebuyers.
We found that in the aftermath of the Great Recession, that Black banks on average actually expanded their mortgage credit access at a time in which arguably many financial institutions were actually fleeing the lending space. But I think the second part is, we're beginning to hear anecdotes encouragingly that Black banks are beginning to look to develop what are called special purpose credit facilities. These types of facilities will give more flexibility to all institutions, but including Black banks, that will allow them to provide credit to people who have been demonstrated to have been historically disadvantaged, or communities that have been historically disadvantaged.
The number of Black-owned banks.
So let's talk about credit for a second, because I think a lot of times people are right. Well, they just need more access to credit. They just need more access to credit. That's all they can, so they can borrow. This whole credit system is racist. Let me tell you. We'll get back to the video in a second, but let me share something with y'all. People are like, why are you talking about race? Because it is linked to class. So let's go into it. Let me share this. So, this is a great article. It says, why credit scores are racist. Smack you right in the face. It says, credit scores reflect economic racism and perpetuate it too. All right, so it says, this system is supposed to be neutral, fact-based way to decide whether to approve a loan application. But the U.S.'s history of economic racism puts BIPOC, or Black and brown people, at a disadvantage in credit score calculations, codifying discrimination into data and producing more discrimination as a result. Rather than leveling the playing field, credit score serves as gatekeepers to wealth building for communities already facing the highest barriers. Despite creating inequity, the system is still an improvement on what came before. Prior to the 1974 Equal Credit Opportunity Act, ECOA, overwhelmingly white male bankers had total discretion over business loan approvals and regularly denied Black and brown applicants based solely on their race. The passage of the ECOA mandated that banks use credit history, not any part of an applicant's identity, in deciding whether to approve a loan. Credit reporting agencies began calculating number scores in 1989 using a formula created in 1959 by two white men that's known as FICO. So, just to let you guys know, I'm older than the FICO score. You're welcome. All right, so let's continue this. It says, but the financial activity that credit agencies use in scoring, which is mortgages, student loans, car loans, and credit cards, is inherently biased against Black and brown borrowers because it's based on financial instruments that economic racism has kept out of reach of racialized communities for decades. For most of the 20th century, redlining kept applicants of color, particularly Black folks, from getting mortgages and building wealth through home equity. Although it was officially outlawed in the 1968 Fair Housing Act, it continued informally, more recent, in the form of subprime lending, which happened in 2008. Remember, we had that subprime mortgage crisis. As a result of this history and many other factors, the Black home ownership rate is just 44% compared to 74% for non-Latina white people. So, employment discrimination has also kept the communities economically precarious. Even today, about half of Black Americans live paycheck to paycheck. Since the majority of credit score calculations are based on payment history and credit use, unstable income can quickly tank a credit score. Auto loans, too, disproportionately impact Black folks' credit scores because many dealers charge them more for cars, and place higher interest rates on their accounts. So, because of their discrimination, what ends up happening? Well, we get charged more, even though we may be on par economically with somebody who's white. We'll get higher APR. We'll get, our loans may not be as high. All because of this. They will judge us by this. And so it makes it harder for us to pay things off. Hell, look, how many of you who are Black that are homeowners who try to get a property appraisal were appraised your property, and this has been recorded in the news, as lower value, but then they switched all the pictures and made it look like it was a white household and had one of their white friends represent as the homeowner, and then they appraised it for like 50% higher than what it actually is. Hell, remember what I talked about a couple weeks back about how Navy Federal Credit Union was approving less? They were approving less mortgages for Black borrowers than they were for white borrowers. It exists, man. It keeps going. It's not stopping. It says notably, most credit scoring agencies don't factor in payments for phone bills, utilities, or rent, which are broadly used across under-resourced communities and good indicators of whether a borrower can consistently pay their bills. Here's the thing. I'm going to tell y'all something right now. If my credit score was based on how consistently I pay my rent on time, my credit score would be high. High. Yeah, I can barely eat. Yeah, I can barely get to place, but I damn sure make sure that rent is paid on time because I gotta live. But it doesn't reflect on my credit score. So when it comes to me wanting to get a loan for something, maybe I want to start a small business, right? Maybe I want to start something that will actually make me more of a productive member of society, but I can't access that credit because I don't have a home. I don't own a home. One was never given to me that has equity. I've never had the capital to be able to buy one. I don't own things like that. So therefore, what do? Right? Because I'm a renter, just like many of you are. Let's continue. The data used in current credit scoring models are not neutral. It is a mirror of inequalities from the past. By using this data, we're amplifying those inequalities today. It has striking effect on people's life chances. Unsurprisingly, racist data leads to racist outcomes. A 2015 report from the Consumer Financial Protection Bureau found that poor Black and Latina people were far more likely to either have no credit history or so little that they could not get a credit score. This happened to me. I didn't really establish my credit until I was over 30. That's how old I was. I didn't establish it when I was 18 like a lot of people. I didn't get my first credit card until after 30. By the way, I don't use credit cards no more because, well, that's a scam. And plus, the APR was like 26%, which me not knowing, things, they were raking me over the coals. I would tell myself not to even get a credit card anymore. But anyways, it says, according to the research from the Urban Institute, a majority of Black communities and majority Indigenous communities have the lowest median credit scores. Residents of reservations have credit scores averaging 30 points lower than those in surrounding areas. It says, because personal credit scores are taken into account for both business loans, having a low score is a major barrier to securing capital needed to start a new venture or grow an existing one. The ideal loan for small businesses is a government-backed loan called an SBA 7A. It has a long repayment period and low interest rates. But to qualify for this loan, applicants usually need a credit score of at least 680. The same goes for private bank loans with favorable terms. So here's the problem. Even if somebody like me went to a private big bank, I still wouldn't be able to get a loan because I'm a renter and my credit is trash. Even though I'm reliable when it comes to paying back my rent, when it comes to paying on my light bill, right? When it comes to my phone bill, I damn sure make that's paid and I'm reliable on it, but it doesn't get necessarily reflected in your credit score. So guess what? My credit is trash. Also, I also don't have student loans because I never went to college. Why didn't I go to college? Because it's too damn expensive. And I didn't want to get student loan debt like my mother did. All right. It says loans for people with low credit scores come at much higher interest rates that add hundreds or thousands of dollars in payments over the lifetime of the loan. Under 600, the only options for most people are cash advance loans or payday loans, which come with highest interest rates, sometimes above 50%. So just as economic racism positioned Black and brown people to have lower credit scores, it now puts them at higher risk for expensive, sometimes predatory lending. I'm going to tell you guys right now, this actually happened to my mama. Because one time she had to go to a payday lender and it was well over 100% interest. It was just like, it's crazy high. Like you borrow 50, they want like $500 back. It's crazy. And so guess what? This is how they operate. And it's predatory because these companies make most of their money off of us. They don't make their money off of rich people. They make their money off of us. That's how they get so rich. Go ahead. How many AMSCOTs are in the country? And I'll end it with this. It says credit scores ultimately are a shortcut to that claim to be fair, but don't seek true equality. They use data with racist history to guess whether a person will repay a loan instead of getting to know that person and supporting them to ensure their financial success. So that is basically why credit scores are racist. I'll put that in the chat. All right, so let's go back to this.
Banks has dwindled immensely over the years.
Are Black banks struggling? Yes. The banks reflect the community in which they are in. So whatever the struggles are of the community, the banks have the same struggle because they're enmeshed in that community. They cannot change it unless the community itself has more wealth and has more access, and we have less discrimination as a society.
Between 1888 and 1934, there were 134 Black-owned banks to help the Black community. Today, there are only 20 Black-owned banks that qualify as minority depository institutions. While people who identify as solely Black or African American make up 13.4% of the U.S. population, Black-owned banks consist of less than 1% of all FDIC-insured banks in the United States.
I think part of it has to do with the broader trend in the banking community. That is that overall, we're seeing the number of banks overall declining and assets being concentrated, particularly in your larger global and more complex financial institutions.
Black-owned banks still lack the assets needed to compete against major players. One United Bank manages over $650 million in assets as the biggest Black-owned bank in America. In comparison, JP Morgan and Bank of America each manage asset portfolios that are worth well over $2 trillion.
So the size of assets really determines what they're able to do from a lending and an investment perspective, which then, of course, drives how innovative they can be. It talks about, it leads to margins in the bank and how many people can show up and what's the staffing look like and all of those kinds of things. And obviously, it's a big regulatory marker that people look on. There's a stability and health of the institution.
To combat these concerns, several big banks and corporations have invested heavily in Black-owned banks following the death of George Floyd. More recently, Microsoft and Truist Financial backed FDIC's new fund to invest in minority-owned banks, each putting in tens of millions of dollars to help its launch.
With Microsoft impact investments, we always evaluate investments on impact first, then risk, then return. So really the driver here is what impact can we drive? The FDIC and Truist have been, critical partners in driving this forward for mission-driven bank.
Most experts remain cautiously optimistic about the recent investments made to Black-owned banks, but agree that there's still work to be done.
I think every corporation needs to look inside their own practices and see where they can themselves remedy some of the historic wrongs that they have done. And so it is great news when I hear about big banks and big corporations saying we're going to donate into Black-owned banks.
I'm not going to finish this entire thing, but let me just what she just said there. Let's talk about this, because I think this is an important conversation, because here's my thoughts, and then I want to get your thoughts. While they offer some benefits to the Black community, I'm not going to say Black-owned banks would be bad for the community. I think they would offer some benefits because, of course, if you have a Black-owned bank, let's say it's a local bank in the community, then it's going to look for ways to offer, lines of credit to people within the community. It's going to give people in the community depositories, people who, need checking and savings accounts. It's going to offer it to them so that you're not always going to that check cashing place and them having to charge you in order to cash your check. In fact, you'll be able to go to those banks and you'll be able to keep more of your money because you're using that bank instead. And so therefore, you won't have to pay a check cashing place any more money. You'll just be going straight to the bank, right? And on top of that, when it comes to if you need a loan, they may be more lax when it comes to their criteria for giving you a loan in that way, right? So, and they may say, well, I'm Black and you're Black. We're not going to discriminate, based on race and things like that. What they still might use credit scores and things like that, which is still inherently racist in my view. But the likelihood of being more discriminatory to you maybe a little bit less, right? Unfortunately, in my opinion, this may still go in the same direction of white-owned banks. Now, hear me out. Wealth creation in this system always goes straight to the top. The goal isn't to create more. The goal isn't to create more Byron Allens, Tyler Perrys, or Oprah Winfrey's. It should be to make sure that all Black people have their material conditions met, and that all Black people are able to live. But this idea that exists within the capitalist system, which operates to put money capital in the hands of individuals instead of the community. Now, I say banks have the fiduciary responsibility to shareholders of the bank, which will concentrate wealth to the top of the bank. Now, remember what I showed you? The owners of the bank, the shareholders, that's who they have a fiduciary responsibility to. This would not be any different to Black-owned banks. You would just have Black people at the top as the shareholders, right? However, community-based credit unions which are owned by the members, which are account holders, and which may be Black owned, will be a much better boon to helping the community. At least until we can get postal banking back. So let's take a look at credit unions and let's take a look at what they entail. So going back to this graph, right? So we already talked about big global banks, right? But what about credit unions? Now, big global banks are owned by their shareholders, right? We established that. Making sure, yeah, okay. But what are credit unions? It says credit unions are owned by their members. And who are the members of credit unions? Members of credit unions are account holders. That's it. So you got a checking and savings account, you're a member of a credit union, which means you have partial ownership of that financial institution. All right, let's continue. Now, depository says accepts deposits, which cash deposits, government entity, state law. Okay. Profits. Credit unions are a not-for-profit companies. Any income generated is used to fund projects and services that will benefit the interests and members and the community. So that's what credit unions are, right? Now, loan purpose, public mandate. Credit unions make loans to their members in local economy where they are located. Productive lending into local communities leads to sustainable growth and increase in GDP. Transparency says FDIC, federally insured credit unions, are required to file standardized financial reports to the NCUA regulatory agency. So NCUA is for credit unions, the FDIC is for banks, right? Independence, credit unions are managed by independent professionals, and then public input. Credit unions have member-elected boards run by local members. So credit union, I'll put it like this. Whereas where you work, so if you have a job, it's typically top down, right? You have the employer and employees. The employer owns the company. Employees just work there, and all the profits go to the people at the top, right? Same thing with big banks. You have the shareholders and the chief executive officers and the account holders. They don't really matter in that way. They don't get any profits, right? Whereas worker co-ops are owned by all the workers, and a worker co-op would be democratically ran by all the workers, and then all the profits would go to all the workers collectively. Credit union is owned by all the members, and the profits are used and stipulated by the members and what they want for the community. So when it comes to worker co-ops, credit unions are kind of like the financial institution version of that, right? It's not as black and white, but stay with me here. So it's better than a bank. So when it comes to Black community, Black worker co-ops, or a community credit union. See what I'm going? All right. So I see Black-owned banks just as another way to introduce Black capitalism. Fred Hampton said something about this. Let me share this with you guys. What did Fred Hampton say? Great website. It says this is out of Hood Communist. Fred Hampton said, "We say you don't fight racism with racism. We're going to fight racism with solidarity. We say you don't fight capitalism with Black capitalism. You fight capitalism with socialism." Thing is See, we got a troll in chat. Anyway, so here's the thing, I think. Using a system that exploits to benefit the exploited by helping them to continue the cycle of exploitation doesn't sound right, right? No, we should be going into a different direction. A good start is Black-owned, Black-membered credit unions and Black-owned cooperatives as a business to help us grow. And here's the thing. I encourage everyone to look into collective business models like credit unions and worker co-ops to help their communities to thrive instead of these top-down, owner-class dumpster fires that have ruined our lives. So, do I agree with Black-owned? Yes. But it's the way we go about it. Because if you're a Black billionaire, how did you get to that position? You got to exploit in order to get to that position. Black, white, doesn't matter. So, that's the point. I hope that was a nuanced answer for you guys. Thank you so very much for watching my channel, and I deeply appreciate it from the top and bottom of my heart. If you wish to support the channel further, so I can keep bringing you content that is educational and informative, you can become a patron on patreon.com/Jaybefaunt. You can find that link in the pinned comment or in the description below. No matter what you give, you'll be supporting independent media and education that helps make the world better. Thank you so much, and you can watch more of my content here. Mwah. Forehead kisses, and have a beautiful day.